I want to start things off by looking at the Australian dollar, US dollar, 4-hour chart. It's in an exceptional circumstance right now. It's been away from the 800 simple moving average for 2004 bars or candles. That's over 300 days, and that's exceptionally outside the boundaries of what is normal. And I want to tell you a little bit about what I'm looking for and explain a little bit about why I am maybe one of the only bears on the Australian dollar that I know about. The currency pair, statistically speaking, doesn't stay away from the 800 simple moving average for longer than 500 to 1,000 candles. It's now 2 to 4 times longer than that. Statistically speaking, this currency pair is in dire need of a correction. Now, the correction can take a long time. However, the correction does need to happen. It invariably happens. You can go back as far as you want to go for 20, 30, as many years as the current currency regime worldwide has been in effect, and it's the same story over and over again. A currency pair that moves away from the 800 simple moving average eventually does have to return to it. And statistically speaking, going 2004 bars happens maybe once out of every 100 times that the currency pair leaves the 800 simple moving average. So we're in an exceptional circumstance, and there's a variety of things that we can look for in order to execute a trade or enter a trade or watch the market. And remember that your trading is your own responsibility, and although I'm here to talk about types of trades that I'm going to take, you can't hold FXStreet liable for anything that happens. Although most of what happens here is going to work out pretty nicely, actually. The 200 simple moving average is colored blue. The 800 simple moving average is colored as a dashed black line. And the red exponential moving average is a 62 exponential moving average. Jenny asks, can I go over the pivot stack method? And the answer is unfortunately not. I do that method in, it takes about 2 days in a seminar environment for 8 to 10 hours each day. So this isn't the environment where I can go over that method. So I apologize, Jenny, if this isn't what you wanted to learn about today. This is a secondary method that I trade that's more of a day trading method that can be used on any day of the week. If the currency pair, the Australian dollar, US dollar 4-hour chart falls and closes below the 200 simple moving average in blue, that is a possible sell trade for us with a stop loss back above the 200 simple moving average and a profit target of the 800 simple moving average. It's totally possible in situations where the currency pair has been away from the 800 simple moving average for this long to draw a level of support and resistance on the currency pair and trade on a break below that level. It looks right now that the currency pair is headed towards the 200 simple moving average on the break of this trend line that I just drew. And it appears that that if you are already short, which most people are not, you could move your stop to break even at the 200 simple moving average and have pure free profit all the way down to the 800 simple moving average if it gets there. The alternate method of entering this trade, we've already gone over method number 1, which is below the 200 simple moving average, method number 2, which is this trend line. Method number 3 would wait for the currency pair to make a new low somewhere around where it's at right now, bounce back upwards, and create for us an opportunity to draw another trend line, and then use that trend line as an entry on the trade. Well, that is certainly a possibility, but that's going to require a lot more waiting, and it could take a week or more even for that to happen. That's the Australian dollar, US dollar 4-hour chart. Most people that I know are bullish on the Australian dollar, US dollar in the long term, but haven't spent a lot of time thinking about the bearish movement that could happen in the short term. Most people are talking about a worldwide economic recovery and that Australia stands to gain a great deal in that recovery. They've talked about the potential for the Australia Reserve Bank, the Reserve Bank of Australia, the RBA, to continue to raise rates. However, all of that seems like a little bit premature to me, and it seems like the currency markets priced in subsequent rate hikes on this currency pair that really haven't happened yet, and might not happen. So that's the Australian dollar, US dollar 4-hour chart. I'm bearish in the short term and possibly bullish in the long term.